What's up, guys? It's November 26th, 2025. It's actually November 30th, but this is the breakdown for November 26th. Had a busy week. Hope you guys had a good Thanksgiving, spent it with some friends and family. And yeah, hope you guys had a good one. We're going to do a 10-minute breakdown of the E-mini where we talk about trap traders, market context, and leg count. That being said, had a pretty good day trading options. I bought this bar. I bought bar 5, and I bought the low of 7. So low of 7 was a nice entry. Kind of sucks. I remember I had this swing up here. I was like, all right, I'm gonna get a new high. I saw the double top and thought, okay, I get out a new high. Bar 44, unfortunately, it crushed me, and I actually still made a decent profit. But yeah, this bar kind of crushed the majority of profits. Still a really good day. Had a good payout after this day on Thursday. If you're in the Discord, you saw that. And yeah, so okay, daily chart, weekly chart, daily chart on the right. I'm doing this on a Sunday. A big sell-off so far, so be interesting. I hope I hope we go sideways and rally just so our intraday session we can have some range, because if this is a really big bar, and we'll see what happens, But anyways, sorry, I had to cut the video there. Something weird happened. Anyways, let's do the breakdown. So we got the weekly chart and the daily chart here. Again, weekly chart had 4 bear bars in a row, something we haven't seen in a while. And this is that first pullback. This bar closed on its high. It's testing the breakdown point right here. So we'll see if this gets a leg 2, this rally, pull back leg 2, or does this get a leg 2, leg 1, pull back leg 2? Because this is also 3 legs down on a smaller chart. Leg 1, pull back, or excuse me, leg 1, pull back leg 2, pull back leg 3. Wedge bottom into support. You can see bears tried to get the breakout down here. The market rallied. It's a double bottom, but now this rally came right up to the breakdown point for the bears. So they're going to look for that leg 2. And bulls want this bar to be nothing more than a pullback for this rally, leg 1, pullback leg 2. We do have 1, 2, 3, 4, 5 bull bars in a row, so that's strong to get a second leg. And this structure is already somewhat complete from a 3 legs perspective. Leg 1, pull back leg 2, pull back leg 3. Leg 1, pull back leg 2, trend line break, leg 3. And then there's also 3 legs down here. Leg 1, pull back leg 2, pull back leg 3. You guys saw the double bottom here, led to a rally. So we'll see what happens. It's a trading range. We have a channel against a channel. Anyways, let's do this breakdown and get to bed. I'm pretty tired. I know you guys are ready to trade. I'm ready to trade. Cap up, bar 1, big big bull bar closing on its high with follow through bars 2, 3, and 4. Bar 2 is a trading range, so on a smaller time frame, it's a pullback. Leg 1, pullback leg 2, and it sells off 4. It's late. It sells off 5 and 6. Now look at where this bounced off, because I was measuring this. This is how I caught the entry. Right around there. Maybe I measured it from there, but right around the low of 6 and the low of 7, it was a 50% pullback, so that's why I entered here. I entered here first because in case this got a quick leg 2, but I was ready to enter down here, leg 1, pullback leg 2, and you can see it exceeded the target. So nice day for the bulls on that perspective. Big gap up, pull back, bears get 3 legs down, leg 1, pull back leg 2, pull back leg 3, sideways price action, and then the market rallies. Leg 1, pull back leg 2, pull back leg 3. I count legs every day. I count counter trend legs, I count with trend legs, and it's really important to understand that, hey, if this is the 3rd leg down, so for the bears, right, so we have a gap up and it rallies, and then for the bears we have 3 legs down, leg 1, pull back leg 2, pull back leg 3. So what does that mean for the bears? That means the best the bears are going to get is a trading range, because we already have 3 legs down, and there's a channel against a channel. So what does that mean for the bulls? If this is 3 legs down and bar 7 is the low, we're pretty close to the low of this trading range, and bulls might want to start buying, and they end up buying the 3rd leg. Now we have 3 bars up. Good breakout, has a gap. It's not a good breakout because it doesn't go far past here, but this rally goes far past these bars here. And shot to get a second leg, there's a gap, and then 15 and 16 become that first pullback. Leg 1, pullback leg 2. Let's see if the 50% pullback worked. It did. So same context. Bears get trapped down here, they short up here, the buyback shorts are at the 50% level, and they make 1.5 bar. Except for this rally, it kept on going. 17 through 23, shallow pullback 24. You can buy the close of that because obviously that doesn't come back to the 50% mark. So you're gonna have to just. So if you're, I'm talking about two different setups here, but the context is the first reversal fail. You're gonna have to figure out how are you gonna know when to put a limit order and when to fade this. You know, maybe you do a study. You do a study four or less bars in the same. I'm spitballing here. This is not a fact. I'm trying to give an example. So don't trade what I'm about to say. But this is how you can set up a study to find out information. You could say, all right, I want to see how many times the 50% pullback happens before the fifth bar. So here we go 1, 2, 3, 4, 5. So if there's 5 bars in a row, 5 bars or less in a row, you're gonna do the 50% pullback entry. And then you say, okay, 5 bars or higher, I'm gonna do the opposite of the first opposite bar. So so this is the first opposite bar, and the opposite of this is buying it. And then you can start to develop ideas like, oh, 5 bars in a row, there's a 55% chance we get a 50% pullback. Oh, 5 bars or 6 bars in a row, there's a 60% chance that we're not going to get a first pullback, or not going to get 50% pullback. So it's better I just fade the first opposite bar. And you can start to develop, more intricate ways to enter. Both these trades are based off leg 1, leg 2s. It's just entering different because the context is different. Here we're in training range, where the training range highs, deeper pullback. Here is a fresh breakout. That's another filter you could think about. Maybe if we're in a training range, you expect a deeper pullback, so 50% is acceptable. Maybe if it's a new breakout, you don't really care for the 50% pullback because traders are trapped, right? The only reason the 50% pullback works is because that's the break-even point. It's not like the magical blah, blah, blah. It's just break-even. Bears shorted the low of 11, 12, 13, 14. Rallied. They start shorting more, and then so they short one entry here, they short one entry there, and that 50% is their average entry. They buy back shorts, avoiding a loss, and then since bears are buying the same place bulls are buying, that caused the rally. And that was a nice rally. 17 through 23. 24 is the first fade. You can buy that close, and then it starts to rally. 25, 26, 27. Another 3 bars, but now look, this is not the spurt. 28 is the first reversal in correlation to 25, 26, 27, but in the entire structure, you're actually trading into a third leg. And look, it depends how you're trading. If you're fading to the high, if you buy the close of 28 and your target's the high, it might get met with 30 and 31. If your target's going to be a swing, which is usually my target, that's going to be a loss for me, 27. But I shouldn't be surprised that's a loss because I'm trading into a third leg. So the probabilities for training range go up. And look what happened after the third leg, training range behavior. We go sideways for pretty much the rest of the day. 31 through 34. 4 bear bars in a row, but ends up getting faded, and we have three legs higher for the bulls. Leg 1, pull back leg 2, pull back leg 3, and then bears get that double top. So a double top means trap bulls are getting out. So bulls buy here, the market sells off, buy more lower, and then the market rallies to their target, and then once it rallies, they get out at their original price. So this is their original entry. They buy here, buy more here, get out here. Just how bears are buying back shorts, bulls are selling out of longs, and that causes a spike down. Leg 1, pull back leg 2. This entire structure gets its own second leg. Leg 1, pull back leg 2, pull back leg 3. And then we start to go sideways again. And second leg traps are very common in training ranges. Look, leg 1, we're in a training range now because there's a channel against a channel. So if you bought any of these bars and didn't take it for a scalp, leg 1, pull back leg 2, pull back leg 3, or if you're just counting the bars, leg 1, pull back leg 2, second leg trap. It's either second leg trap or wedge top. Wedge top if you're looking at it from a fractal perspective, or if you're just looking at the 5-minute, it's a second leg trap. Leg 1, pull back leg 2. The third leg's right there because this is a tail, and it closed right there, and there's a small tail on 48, and then it rallies and sells off. Leg 1, pull back leg 2, pull back leg 3. You guys, let me know in the comments if this is making sense or it's a little confusing. I'm counting with trend legs and I'm counting counter trend legs at the same time. So if I'm jumping around too much, please let me know. It's making sense in my head, but I also want it to make sense for you guys. That's what's so important to me. 51 sells off, and just like over here, we're in training range, third leg down, ended up being a rally. 52 52 sells off and then rallies, so we know there's trap bears, and I'm willing to bet 54 lines up very closely to the 50% level. Right there. So actually it went a little bit deeper. We're in trading range, so you can't expect a deep pullback. And then the market rallies, you hit your 1.5 bar. I wouldn't trade 1 bar, but the context lined up for a second leg because with 3 legs down by the bears. Bar 52 is an outside bar, so that's dangerous buying the high of it. And we're pretty much in a bull regime. We've had up more than 20 bars above the EMA. Bulls get another few legs higher. Leg 1, pull back leg 2, pull back leg 3, and that leads to a sell-off. Leg 1, pull back leg 2. Nice 3 bear bars in a row. Market then rallies on the half day. I think this was Friday. Leg 1, pull back leg 2, pull back leg 3. And then leg 1, pull back leg 2, pull back leg 3, pull back leg 3. But the problem is, look at this sell-off. Kind of crazy. It'd be interesting to see what happens tomorrow. And look, there's a double top. Bulls bought up here, buy more down here. They actually got out here or here, and then market sold off. All right, guys. Hope you had a good one. Thank you for your time. Apologize this is late. I'll talk to you guys tomorrow. Thank you. Bye.